Good afternoon, everyone. Jason here. Today is July 17th, and this is your aftermarket update. All right, it is summer trading. It is contract rollover week. Why do I mention that, and what does that mean? That just means that the market has the tendency during this during this window to be a little bit choppy and sluggish. Those are the conditions that we were expecting here today on the CL, and that is exactly what we had. So before I go through and talk about the trade here today, a couple of the trades that we took, first thing I want to do is I want to talk to you about this thing that happens during our London European range. So the European session, the London Open, is at 2 a.m. Central Time. But what we look for is a window of time 1 hour before that and 2 hours after that. That window of time, which here on this chart is represented by this gray-colored area, it's in that window of time that about 70%, give or take a few percentage points, the high or low for a session on the CO gets made in this area. And so today you'll look up here, and the high has been made up there at 46.88. We'll scroll back just a little bit here, and you'll see that on Friday, the low for the session was made in that time frame, and I won't go through all these days. We'll just go look at another one here. One more day here. This is the day before that. You can see that the low for the entire session also made in that area. So the reason I tell you that is this. As we were looking at the market today, you could see that the market was making a series of lower highs and lower lows as we opened up into the market today. So one of the things that we were looking for is a pullback out of this zone, right? So having said that, we had a fairly significant, and this is on a higher time frame chart, and I won't go through it here, but we had a fairly significant area between 20 and about 25 and 10. So about a 15 tick range underneath us. In fact, the sweet spot of that range was underneath us at around 12, and that's what we were looking to target on one of our shorts today. We started out with a little bit of bad luck. We were looking to get long right around 23. There was some liquidity that was stacked up right at the top of that zone that I just mentioned, 25 down to 10. That's a 15 tick area. We had some liquidity stacked up around 23, and we were looking to start the day by getting long at 23. We talked about that in the trade room, and the market promptly comes down and hits the low and makes the low down there at 46.26. We then talked about the fact that we were going to get into one of our market maker levels here at the daily structure mid, and that was going to be our target up there around 57. Settlement today was at 54, so we knew that the market would rally back into that zone. So we started out with a little bit of bad luck for us. In fact, we missed my entry by 3 ticks. We come back up here, and I take a short right off this structure mid. We had a couple of reasons for that. We had settlement. It is the structure mid. The higher low about 70% of the time gets made in that European session. I thought we would sell off out of that structure mid area. And we also had one of our retracement measurements that we looked at as well. So lots of things going on there. And then couple that with the fact that there was quite a bit of liquidity parked above us, and we felt like it was a good place to look to get short. So the bad luck continued. I did get short right here at 56. My stop was at 66. Right there was the swing high at 65 before it pulled back down just a little bit and then rallied right up, took me out by 2 ticks. So at this point, and then, by the way, went all the way down to 32 out of my entry. So at this point, I had gotten missed on a long that went to what would have been eventually the target. I got hit and stopped out by 2 ticks before it came back down again, and that was a little bit rough. I did take another trade short. We got 6 ticks on it before we caught the OTG trade of the day here. And one of the things we talked about is this was the 9 a.m. to 10 a.m. swing zone. So this blue area is one of those hidden time frames that we look at. We call it the 9 a.m. to 10 a.m. swing zone because there is a reversal that occurs somewhere in that hour-wide zone. And one of the hallmarks that you look for is something like this. You have a 3 drive up here. Actually, it ends up being 4 bars where you have this big 4-bar drive. We look for a 3, but this one, really you could take this one out and count these together. 1, 2, 3 drives up. You have a spike up, red bar, market pulls back. We talked about how that is one of the reversal kind of ideas that you look at. We talked about the secondary way to get into it would be right here at 57 again. And so again, a lot of factors contributing to why we thought the market would sell off, and eventually it did. We were looking for a target at one of our market maker level. Let's see, revision signals down here, right down here at 14, and down between 14 and 7 is 7 ticks. We also talked about the fact that we had a retracement area and a support zone on a higher time frame with their sweet spot down there around 12. So we were looking for 12 as our potential target here on this move. One of the other ideas that we have here is we look at our market maker levels. We talk about the fact that if the market doesn't kick this, if it kicks the signal, you're looking for it to pay the target above or this target down below. Again, keeping in mind that you're making a series of lower highs and that the higher low for the day about 70% of the time gets made in the London session. All these reasons that we've just talked about, we were considering that the market would be looking to get down into that daily structure target underneath. The market rotates around. We get in short at 54. The market rotates around and then eventually sells off all the way down today into your daily structure target. Now, I did, for sake of full disclosure, see this here. Once we got down to 17 and we began this toppy kind of formation up here at 27, we made one push down here to 13. 14, couldn't get through it, and I'm out at 22. So we went 54 to 22 is 62 is 32 ticks times 2 lots is 64 ticks on this trade, so $640 trade. I had a small loss. I had an even smaller winner, and then we had the big winning trade here. So again, this whole process, determining direction, we were looking for choppy to sideways conditions because of the nature of the market, what was going on right now, contract roll, summer months. We were just looking for this thing to be a little bit choppy and sideways. When it's like that, you're looking to buy dips and sell rallies. So direction is choppy. We set that. We looked here, a series of lower highs off of that area right here in this European session range. And then we tried to find an area that made sense, a decision point that made sense. That was right here at the structure mid. You also had settlement, and you had a favorite retracement area. And all of that combined, you then get into the entry. And then it's, if you're right, you take it to the target. And if you're wrong, you cut the loser short, right? So let the loser short, cut the loser short, let the winners run. And that's the process that we let play out here today. So there is a trade of the day video here that I'm going to let you watch. The trade itself lasted about an hour. I'm going to cut it down into pieces, play a little music behind it, speed it up so you can get the gist. So again, that theme of kick the signal and pay the target also happened over here on the ES today. If you look down here, this is right after the open. We kicked the signal and we ended up paying the target. Now, for the sake of complete disclosure, I did not take a trade over there today. The reason I did not is the entire range is 6.5 points, and that was a very narrow kind of trading range there for the ES today, so I wasn't that excited about it. But again, here's what's really cool. A 6.5 total point range on the day, and your kick the signal, pay the target here on the ES was 6 points. So again, market maker levels really laying out the process for you and giving you structure. You really put up with no heat if you got in long here at the structure signal, had a 2-point stop. You went, you had 1 tick, 2 ticks of heat. So you had a, let's see, that's 6 points, 3-to-1 risk reward ratio if you would have taken that trade. I did not, but again, just laying it out there for you so you can see that even though I didn't take it, the market did perform as expected over there on the ES. But the trade I did take is this OTG trade of the day. It is 32 ticks times 2 lots, 64 total ticks on the win. And so without further ado, here is the OTG trade of the day. Okay, I'm filled at 54. It only took 350 orders to get filled up in that zone for me to get filled. I must have been the last guy in line. 54 and I'm in. Target is 12. Target is back to 12. you could see that even in the sped up version of that trade, that there was a lot of back and forth that went on. In fact, several times looking for the market to get down through 46.40, there was a level there that we could not close below 41. So 46.40 really held the market in check for quite some time, but eventually our persistence paid off. So incorporating all the things that we look at here, direction of the market, decision points. Once we enter our strategy, we're looking to cut the losers short, let the winners run, and you saw all of those in examples of all of that there today in that CL trade. So it was a good day here at the Oil Trading Group, even despite the fact that we were in fairly choppy conditions, summer trading and contract roll. We still ended up with a very handsome trade of the day that allowed us to get done what we needed to get done. So again, as always, I want to say thank you for watching the videos here at the Oil Trading Group. And until next time, I want to wish you good luck and good trading.